I'm Michelle Martin. Good morning. Welcome to Money and Me. The US does not have a spot Bitcoin ETF, but as of the 25th of November, Singapore does. I'm taking a closer look at that fund composed of actual Bitcoin. Singapore-based fund manager Fintonia has launched two new Bitcoin funds, the Fintonia Bitcoin Physical Fund and the Fintonia Secured Yield Fund, both meant for institutional investors. Now, it says that the new funds are intended to provide simple and secure exposure to Bitcoin for professional investors. Here to tell me more about both funds is Adrian Chng, founder and chairman of the Fintonia Group. Good morning, Adrian. How are you?
Very well. Good morning, Michelle. Great to be here.
Great to speak with you and to see you in person after all this time. Now, is the physical fund's objective, let's get this clarified for the listener. Is the physical fund's objective to buy actual Bitcoin, or are you buying a derivative?
No, the objective of the Bitcoin Physical Fund is to buy the actual Bitcoin, and it is not to buy derivatives. And this differs from other funds overseas, the Bitcoin ETF, which offers a derivative. And we believe that holding the actual Bitcoin is a far superior exposure for investors to Bitcoin.
Now, since you're purchasing actual Bitcoin, where are the physical fund's assets stored?
So I mean, it's interesting. We call it physical, but actually it's a digital asset.
Digital.
But
Yeah.
but it is physical in the sense that it's not a derivative. We secure. I mean, security is critical for Bitcoin and cryptocurrencies, and so our Bitcoin is held by a third-party licensed custodian who has the latest technology to store digital assets, primarily also in what we call cold storage, and they're insured against hacking and theft.
Now, what type of institutional investor are you targeting, Adrian?
So essentially, when we say institutional, we mean anyone who's non-retail. So there's a few different categories. There would be high net worth individuals, family offices, asset managers, private banks, endowments institutions, and these are kind of examples of non-retail investors that will be interested in this product.
Help us understand the problems associated with purchasing Bitcoin that this new fund solves for institutional investors.
Sure. I mean, we say that what we do is we bring order to chaos. We've all heard about Bitcoin. We read that it's, for example, up 100% year to date. Now, after the weekend, it's up 70% year to date. But still, we also hear things about hacking or fraud. And in Singapore earlier this year, an exchange called Talk went under with $450 million of investor money missing. So what we do is we bring order to this chaos. And particularly if you're an institution or a professional investor that has fiduciary duties, if you're managing someone else's money, it's very difficult for you to buy with confidence. So we solve that problem. Buying Bitcoin at scale or selling Bitcoin at scale is difficult. Many exchanges are unregulated. There's a risk of lack of liquidity, and there's problems moving cash in and out of the system. But as an institutional investor and a regulated fund manager, we've connected to multiple exchanges, multiple counterparties to allow our investors easy access to Bitcoin. So, for example, there are more than 1,000 exchanges.
Right.
And which one should you go to? So we solve that. And the other major issue is security. Bitcoin, for example, we know has dropped over the weekend, 10%, 20%. And as a fund manager or someone with fiduciary duties, we know that part of buying Bitcoin is volatile. But if you invested your client's money or recommended they invest in Bitcoin and the exchange got hacked or your Bitcoin got stolen, then you'll be in trouble. Then you'll be asked, why did you invest in an unregulated exchange? Why did you do this? So we secure this and we make it what we call a more traditional institutional grade investment structure for professional investors. And I guess the last thing that's interesting, the last thing that's interesting is Bitcoin and cryptocurrencies fall between the cracks for legislation. So if you wanted to pass it to your estate, if something happens to you, legally it doesn't exist. And then it's very difficult because Bitcoin is a bearer instrument. So if I turn up with some Bitcoin in a USB stick and just say it's $2 million or $5 million because I bought it very early on, already when you go to the bank or the exchange, they say, hey, Adrian, are you a money launderer? Are you a drug dealer? Where did you get this Bitcoin? Can you imagine how much more suspicious it would be if you turned up and you said, oh, but this came from my uncle, right? So this
Right.
is a major issue. But if you invested in a fund, then it's all documented. We're regulated, and it's all accepted by courts for probate. And again, it's a traditional structure that fits into our current business practices.
And it fits into compliance frameworks as well, which would
Absolutely,
be front of
yes.
mind for institutional investors. We're finding out more about Singapore-based fund manager Fintonia, which has launched two new Bitcoin funds, the Fintonia Bitcoin Physical Fund and the Fintonia Secured Yield Fund, both meant for institutional investors. Adrian, what can we learn of institutional flows into Bitcoin from the type of flows that you are seeing?
I mean, what's interesting is we're seeing, I would say, a lot more demand from mainstream professional investors. I think if you went back even 3 years ago, that there would be very little. If you mention Bitcoin, mainstream institutional investors would look at you strangely. Now they may still do that, but less so. I'll just give you one data point. Coinbase, which is listed in the US, they IPO'd recently. They disclosed the amount of volume that has been traded by institutions versus retail. And in the last 12 months, this year, uh, the volume is up 10 times versus last year. And that is a huge leading indicator or an example of where we see institutional interest. What the difference is, Coinbase is in the US. What we miss here in Asia is an institutional grade product for institutions. And that's the gap that we hope to fill.
Now, help us understand the nuts and bolts. What is the minimum investment for both your physical fund and the yield fund?
If investors were to invest in a personal name, it would be US 350,000 for the physical fund and 250,000 for the secured yield fund. If you were to invest in a company name, then it would be $1 million US.
Can you give us a sense of how large the physical fund is, the current value perhaps?
Yes, well, I mean, the current value is changing, but what I would say is that we expect to be triple digit millions within the next six or so months. The demand is significant, and
Hmm.
despite the volatility, I think many people and many mainstream institutional investors believe that Bitcoin is here to stay.
Who is the yield fund likely to count as borrowers? I mean, where do you expect to see demand for borrowing come from?
I mean, yeah, what is interesting is we get demand from all around the world, but typically there would be, I would say, traders, people who are buying and selling Bitcoin and other cryptocurrencies. They hold Bitcoin and they would like to have cash so they can uh, uh, make more money within the chaos. There will
Hmm.
be Bitcoin miners who basically get paid in Bitcoin, and for them to sell their Bitcoin to pay for their electricity bills or wages doesn't make sense. They would rather hold it, and they would rather borrow money to pay for their working capital needs. And the last is we have lots of, I would say, high net worth individuals or corporates or companies that hold Bitcoin, and they were early investors, and now they would like to borrow, get some cash for their own needs. So many banks will not lend or take Bitcoin as security. So this is a product or an offering that we can offer them.
This is a very new sort of product here in Singapore. What sort of return on the funds can investors expect?
Well, the Bitcoin physical fund is going to track more or less the Bitcoin price. So as I mentioned, recently it was 100% up year to date this year. Now with the recent drop, it's still up about 70%. But if you look over the returns of Bitcoin since 2010, it's around 245% internal rate of return. So that's every year. So if that Bitcoin continues, then the Bitcoin physical fund will follow that up and down. The secured yield fund is slightly different because that's a private loan fund. We lend money to people who are who make money in the chaos. So we lend them money and we take security in the form of their Bitcoin. So that we expect to have high single-digit gross returns, or low double-digit gross returns for our investors. But it will be with a AAA-like risk of default. Given the amount of security or Bitcoin that we hold to secure the loan, we think the risk of default is extremely low.
Adrian, give us a sense of your thoughts on how Singapore is evolving. You know, we've heard about Singapore's ambitions to be a global crypto hub. What do you expect in terms of regulation of the crypto space here in Singapore?
So I think Singapore has taken a lead in trying to clarify areas where it wishes to manage the risk, and then perhaps leaving open other areas so to allow innovation to happen. So one area that clearly I think is in the mind of Singapore regulators is to protect retail investors. So for example, our fund is for accredited investors or professional investors. It's not for retail. So I think definitely Bitcoin and crypto protecting retail investors, that trend will continue. And that's a concern for Singapore regulators, but all around the world, right? I think the second area, which is clearly an area of focus, will be on money laundering, combating the financing of terrorism, know your customer due diligence. I think that area similarly is a concern for all regulators. So I'd say that they're the two areas generally as a trend that I would see MAS focusing on. I mean, they have focused on, will continue to focus on. But then around those areas, there's a lot of room for innovation.
Well, speaking of regulation, since Fintonia is regulated by the MAS, does it follow that your funds are regulated as well?
Yeah, so this is a little bit of a technical legal question. The Singapore regulatory regime regulates the fund managers rather than the funds themselves, unless the fund is for retail. So in our case, we are definitely a Singapore regulated fund manager, and we've created an institutional grade Bitcoin fund. So we will be through the regular checks of MAS, they will make sure that we follow the right standards, whether that's auditing, whether that's custody, whether that's security, and so on. So, that's how we fit into the Singapore regulatory regime.
Thanks for clarifying. Now, given the moves that we've seen just over the weekend, Bitcoin carnage, it's been described, what are you expecting for where we could perhaps see Bitcoin in 2022 or cryptocurrency as a whole?
So I'll just talk about Bitcoin specifically because Bitcoin has some unique characteristics compared to other cryptocurrencies. So Bitcoin only has 21 million, so the number is fixed, right? And it is what I call a structurally upward asset. And by that, I mean there's a limited number, there's only 21 million. And there's increasing acceptance by institutions that Bitcoin is here to stay and they should have an exposure. So if you have increased institutional interest, i.e. demand, and you have a fixed supply, then over a period of 3 years, I expect that the price will go up. Now, this is my view, it's not advice, but that's my view. However, it is very, very volatile, as we can see, particularly given supply squeezes, given the chaos, as I said, in the ecosystem. But I am generally positive about Bitcoin, and in 2022, I can't predict the price, but I would be generally long Bitcoin. I mean, that's just the way I look at it.
Adrian Chng is founder and chairman of the Fintonia Group. We've been finding out more about the Singapore-based fund manager's launch of 2 new Bitcoin funds, the Fintonia Bitcoin Physical Fund and the Fintonia Secured Yield Fund. Adrian, thanks for joining us here on Money and Me. Money FM 89.